Hey guys, welcome to another video brought to you by Total Control Traders. What a crazy market we're living in, eh? Before we get into it, just a quick reminder, there are still some giveaways left for a 7-day free trial to our trading community. Get a sense of what our trading community looks like. We currently have a success rate of about 85%. Check it out. Make sure you grab it. Limited quantities. First come, first serve. All right, let's get right into it. Look at this crazy market. Let's before we go into the technicals, let's talk about what exactly is happening. What's causing these movements, these volatilities? Now, this is first time that, to my knowledge, to my personal experience, of this type of event happening. And this brings me to the point where that's why we stick to technical analysis. Regardless of what the news are, when the news are going to come out, with technical analysis, things tend to work out exactly what you expect. Whether it's bear news, bull news, charts tell a story. Okay. In my previous videos, before Thursday, I've mentioned that we have hit the 1-to-1 extension target based off of this higher low, which is a test of previous high before the crazy run back from June to the higher high to the pullback of the lower low. Okay, this was technically a lower low. So you run from a lower low to the higher high to the lower low. On the weekly chart, it'll be very noticeable. You run from here to here to here. Easy way to run a fib extension. We can see that this trend has not changed whatsoever since the run. Okay, easy spot to run it. And with that fib extension, it shows that we hit the 1-to-1 extension target. And now on the weekly chart, we can clearly see that it's rejecting with a chopstick top from it. Chopstick tops generally means a reversal. So especially if we're seeing this type of weekly bear volume. Again, regardless of what's causing this, technical analysis is telling me that we will be seeing further bear action. Again, it's going to be based on this is the first time of this type of event, so there's going to be uncertainty. There's no for sure given that the market is going to go down further. Use your judgment, and in the past, technical analysis have served me well, so I will be sticking to it. Just stick to the chart, look at what's happening. Now let's get into what exactly caused this. First, funny thing, I was calling into GoDaddy today for some website development questions. Brokerage was down earlier today, so just ended up deciding, you know what, not gonna trade in this market, even though the bounce had already started at that time. I was like, well, there's no point stressing myself out about it. Remember guys, saving that mental capacity for future trades is extremely important if you are looking to do this for the long term. Okay, you don't want to be stressing yourself out day after day, and that's why it's much harder being a scalp trader than a swing trader. When I first started full-time trading, I was so excited, just went scalp trading day after day. I was looking at that 2-minute chart, that 5-minute chart, and just scalping off of it. It's fun. Don't get me wrong, it's definitely fun. It's for some people, but it wasn't for me. It created a lot of stress, and mental capacity is very necessary to keep going in the long game of this. Now the cause of this was, to go back to the story, I called into GoDaddy today, and the girl that helped me out, she as she was helping me through the website, she realized, hey, you're a day trader, hey? So first question she asked, what do you think of GameStop? Okay. The cause of this move particularly was, I would say, mainly due to Reddit users, Reddit pump on a few specific stocks: GameStop, BlackBerry, Nokia, AMC, and there's one more, I think is KOSS. Anyway, so what happened was a short squeeze on those tickers had caused ETFs to or indexes to sell off and to cover their short positions. And then what happened on the bounce today was majority of the brokerages, they had restricted new positions on those tickers. So with the limitations being put in, the market was able to obtain a little bit more certainty. Thus, the bounce was a lot stronger than anyone anticipated. I would say at least majority, maybe not anyone. So at the start of the day, posted a message in the chat room, our 24/7 chat room. Make sure you check out our website, totalcontroltraders.com. So in the chat room, I posted first thing in the morning, anticipating a bounce minimum to the 0.5, which lined up with the previous low. We can see this being a key zone where we had bounce, okay, and then a bounce here too, and a rejection back here. So this was a key zone which lined up with the 0.5. However, on the hourly chart, we can see we just blew straight past all resistances. Went past the 0.382, past the 0.5, even past the GP, even past the previous lower trend line of the wedge, which was a long-term trend line. On the hourly, we can see that this has been a long-term support trend line. On the 4-hour, it looks like we rejected it, but on the hourly, we did close over it. So that's considered that we've passed it. Then from there, we can see, well, once we got to the GP, we started seeing a decrease in bull volume, and eventually just led to a further sell-off once this, from what I hear, it's brokerages are starting to allow new positions on those tickers again, and that could be partly why we're seeing a further sell-off. I mean, if we look at GME, it's up after hours again, and that could very well be the reason. However, stick to the charts. Disregard the noise. It's all fun and dandy to watch. You know, read the post, watch the videos. There's tons of funny videos out there, but if you're being serious about your trading career, just stick to the charts. And if you're having trouble staying patient, maybe go read those posts. It'll help entertain you and help your hands get a little bit stronger. Today, I did not, can't say that I didn't place a single trade. I picked up 2 positions, but didn't sell anything. So technically on my profit tracker, it's 0 trades. 0 trades today. Just 2 small entries. So if you're sticking to the charts, use the RD8 as your guide. We can see on the sell-off, we got rejected, another rejection, passed it, bounce started from right above the GP, passed it, then came back down, double bottom, bounce started, went past the RD8. That's your entry signal. Given that your brokerage was working, of course, Seems like every single Canadian brokerage is having problems lately. Perfect timing. And seems that whenever there is major events, Canadian brokerage tends to have problems. Anyways, so from here, bounce, supported by the RD8, didn't even touch it, didn't even come close to it, broke under, rejection on the next candle. Now potentially another rejection after hours right now. All right, that's enough. This is the reason why the intro is a lot longer in this video. Just want to point out this is it's like 2020, you know, once in a lifetime event. This type of event likely might happen more times in the future. Now that retail stock traders, retail traders know that this could work. So likely to see some more in the future, unless of course the market makers come out with new rules preventing from this type of event. But let's go to the next ticker. NAS, exact same. Past the GP, coming back down. Now we look for, well, bounces a little bit weaker. We are not green right now versus SPX is green. And let's see where we're going to be bouncing from on SPX. Let's draw this too. So we're right on the 0.5 right now. If we start bouncing from here, that will give bulls a lot more confidence. NAS, much closer to GP than we're already past the 0.5 fib retracement. So NAS is looking weaker than SPY or SPX. Same idea. Dow's was strong before, or was weaker before this pullback, but now looking similar to SPX, more similar to SPX, or even could even say stronger than SPX. Let's take a look. Yeah, a little bit stronger than SPX. We're closer to that RD8 than SPX is. All right, US 10-year over 2-year. Beginning to show signs of pullback. Yet another rejection from the resistance zone. Big upper wick following some lower wicks. Market uncertainty. Gonna have to see what's going on here. We don't want to see a break of the lower trend line. VIX, big pop yesterday. Following today, we're seeing indecision candle, as market is indecisive right now as well, due to uncertainty. So tomorrow, if we see a big pullback, we're gonna want to see a break of 37.21. Key to break. Well, resistance zone 35 before that. Break and hold over it. Next, US dollars. Bouncing from the daily 8 yesterday, we have now passed the inner wedge, the smaller wedge, inner wedge, but there is another trend line above it, and we are seeing upper wicks on it. As market uncertainty continues, US dollar is anticipated to go up further. So let's see what happens here. BTC still in that channel, seeing a decent bounce yesterday and today, or today and after hours, so tomorrow. There is that channel that's we are still trading within. So pay attention to the upper trend line. This does not apply. Actually, that does apply. We actually double bottom, near double bottom around the GP. So this could very well be a reversal. Slight bull divergence as well. Slight bull divergence on the daily, bouncing from the GP. This could be a reversal for Bitcoin. Gonna have to see the follow through tomorrow. First resistance to break that 0.382, previous support and resistance area around 34,308. If we were to draw it out, it would be this zone that we have to pass, which right now we're having an initial rejection from. Okay, that's market update. Now let's get into the hottest tickers. I haven't changed the hottest tickers yet because aside from Microsoft, I haven't really seen anything that's substantially noticeable for interest wise or market chatters or trade volume kind of things. So keeping the same ones until I notice something different. First one, Tesla. Nice bounce from the trend line, holding the, not from the trend line, but nice bounce, holding the trend line and holding that key of 800. We can see that this was the previous low from the wedge forming, and 800 being a psychological support. It's a good thing that we held it. I believe after hours yesterday we touched perfectly on 800. Let's take a look. Nope, fell $1 below. Then from there, slight double bottom, and we are seeing a bounce. Long-term wise, there is a gap that we left behind. So short-term wise, would anticipate a gap fill, the bounce to the gap fill, then from there probably reject and get walked down by the daily 8. So use the daily 8 as your guide. Right now, know that we are trading under it, meaning the ticker bears, it is favoring bears. So if you are in the bull position, watch for the daily 8. If we are rejecting after the gap fill, that's your exit signal. Okay, daily 8, very important on this ticker. Next, Apple. Trading under the previous support, under the daily 8. Decent bear volume. Closing near low of day. Anticipation is to fill this gap that we left behind back here, down to 132.49, 132, call it 132.50. That would be the price target if you're looking, the very first price target if you're looking for any sort of bull positions. That would line up with some sort of fib too, would it? Nope. All right, we're likely to see a stall around this zone too. So let's just draw that out. Instead of a support line, let's draw out a zone. All right, key zone 133.59 to 131. Potential stall around 133.59 because that's previous support, resistance, or resistance support plus GP. Once that's lost, we are looking down at gap fill following this stronger support at 131. Next, Amazon. Still in that wedge, fell within the inner wedge. Loving this setup actually. We have seen 1, 2, 3 touches. Potentially for another 4th touch. Now most ideal on wedges is, I haven't read the rules on wedge, but from what I've seen, most ideals are 3 touches. Okay, and this is 1, 2, 3 already. And from the top, 1, 2, we've just made the 3rd one. So from here, anticipating a bounce, gonna be eyeing, look at that, lines up, eyeing the GP area, which is in confluence with the previous support, or what do you call this, demand zone. Price target 31.84. That'd be the entry point. You can actually mark this down. Okay. Next, PLTR. One of my few trades today. One of my 2 trades today. Holding that trend line. However, still trading under the RD8. Trading above the daily 8. Oh, nice. Did not see this. A hold of the daily 8 alongside the trend line. On the shorter time frame, rejecting from the RD8, but we are still holding the trend line. Lack of volume. Gonna want to see a pop tomorrow as this RD8 comes down. We are going to form a short-term RD apex. Gonna want to see a break tomorrow. Keep an eye on which direction it's gonna go. Right now, based on the market, it's kind of uncertain. Could very well just break there. Overall, chart is looking strong. Like this ticker, we'll be keeping an eye on it. Next, Zoom. All right, inverse head and shoulder is still in play. We held the 0.5, which when I took another look at it, there was an extension target. So we broke this support, broke under the support, and then if you draw from the high of the bounce to the lower low to the lower high, that will give you an extension, fib extension target. We held that extension, 1-to-1 extension target, which lines up with a 0.5. That would have been a nice area for entry had you entered. And there was a already bullish divergence as well. So everything lined up here. This, I missed it, wasn't watching the charts today. We'll be watching it tomorrow very closely, watching the reaction on this longer term trend line. I want to see, now there's going to be a couple potentials here. Could very well be like that too. Because of this wick, there's going to be a concern of potential more resistances towards our way back. But this trend line would be the first resistance. Tomorrow, we'd be looking for reaction around 392.75. I want to see the bull volume come in and break that. Keep in mind, we could very well just have a breakout fake out due to there being another potential trend line up here from a double wick. Okay, that's it for hottest tickers. You know what? Let's include Microsoft as part of the hottest tickers. What a run, guys. What a run. Let's take a look at this. Well, depending on how you drew the wedge, 1, 2, 3 touches. These ones never touched. So 1, 2, 3 touches. Perfect. 1, 2, 3 touches. Break. All right? Perfect. All right. So what happened here? How much are we running? Chart froze. Okay. 14.4%. One of the very few that had a positive earning during the last 2 days, or this week actually. A decent positive earning. 23%. And we are trading over that 4-hour 8. Currently forming a 4-hour chopstick top. Lack of bear volume. already made a higher low. So if you're in the trade, easy stop right here. 230, your easy stop. Or you could use the 4-hour 8. 230 would line up tomorrow, depending if we're having a little bit further pullback due to the chopstick stops. Would anticipate a daily bull flag to set up. From here, we want to hold that daily 8 for the bull flag setup. So what we're looking for would be something along this line. Maybe a little bit more. Something along that line. Gonna watch for a support at 230. Alright, that's it for hottest tickers. Let's get into the rest of them. First one, NIO. Nice support. We are holding this support, noticeably holding. Finally filled the gap today. 55.28, 55.18. Yep, finally filled the gap today. So from here, based on how the charge price action looks like, bull flag can now be confirmed. Well, not confirmed. Bull flag can now be considered that reversal to start. Want to see that increasing bull volume first thing tomorrow? Then from there, break the bull flag and see continuation. Price target remains at 70. From the previous low to this to the higher low. Remaining at 70. Then if we get past it, we'll be looking up at 90. Chart's looking great. We'll be adding it to the watch list. There is a price target upgrade on NIO as well after ours. So watch for that reaction first thing. Sometimes it's funny because some price upgrades, they don't react the way you think they should. They go inverse. So they drop instead. So it's actually good that if you aren't, might be a good thing that if you aren't in the position right now. Sorry, my dog came to visit me again. Anyways, yeah, might be good if you're not in the position right now. Gonna have to watch that first thing tomorrow. All right, next, LI. This is my dog. His name is Georgie. Say hi. Oh, you just finished dinner, eh? Literally just burped on me. Alright. LI. Nice triangle on the daily. Not enough touches either way. We are seeing a decent hold on this previous. Yeah, it's noticeable. Support, broke under, came right back. Support. Broke under, went right back. Support again. Now it's serving as support again. 31.20. Noticeable price to noticeable support. Gonna want to hold that. Right now we are trading on the daily 8. Ideally, want to see a third touch before a break. I wouldn't call this one a golden setup because there is no 3 touches on either way. There is only 2 touches. So if we were to break out, anticipation would be a rejection from this zone. The previous high, 47.70. Okay. Next, FUBO. What a rejection today, eh? That's some crazy price action on low bear volume. Judging by this, looks like it's a lack of buyers. We did see decreasing bull volume in the previous 4 days before yesterday. was very well extended from a 88. Makes sense, especially after this dragonfly reversal candle as mentioned yesterday. And now we are back right on this support zone, which is in confluence with the 88. Gonna have to watch the reaction tomorrow. First thing tomorrow, depending, we could very well just gap down and keep dropping. But based on the volume, it doesn't say that. It's not telling me that. The volume is telling me that it's if we were to gap down, it's gonna start getting bought up. So it could be a nice bounce play. If you are trading, if you're having a Canadian brokerage account, I would potentially avoid trading first things in the morning, even though they're generally the most fruitful. Trading first thing in the morning, having that nice scalp first thing in the morning. But because of the brokerage issues, I would recommend maybe avoid trading that first hour or two. But this should present a nice bounce play for tomorrow. Next, QS. We are seeing a nice hold on this gap after this gap fill. Gap fill bounced, slow grind down. We are holding the gap fill target of 44, I believe, 45, somewhere around there. We are still getting grinded down by the 88, but look at the volume. It's starting to really decrease. So this chart, my anticipation is we are seeing a curl here. Potential, you could call this a bear flag too, but this looks more like a curl for me. This was a bear flag. Now we're curling. Looking for some upside. 44.55 must hold. Do not want to close under it. Chart's looking great for reversal. Next, CGC. Congrats, CGC. Congrats, CGC bulls. Oh my God, cannot say that. CGC. We broke on over the trend line for the first time since November. Chart is looking extremely bullish. We are on. Let's look at the weekly, see if this is drawn correctly. Yeah, it's drawn correctly. All right, so we are trading over that 1-to-1 extension target on not noticeable bull volume. Lack of sellers. Earnings coming up February 9th, so 1.5 week away. Watch for the price action. It's ideally we just want to see sustained bull volume that keeps us going. 88 is your guide, like this. Bounce straight from the 88. Okay, chart strong. No reason for exits. Space. Huge upper wick yesterday. When we reviewed this yesterday, I believe I mentioned that it's similar to FUBO, except it's green. But it is still huge upper wick, close to that 1-to-2 extension target. Daily target, 88, still hasn't touched it. Low bear volume. Would anticipate. This is somewhat of an inside bar today. Would anticipate another inside bar tomorrow. $12, yeah, it makes sense. So would anticipate something similar to today's candle versus yesterday for tomorrow. Slight inside bar, potentially slightly broke, or inside bar with potential slight breaking of underneath. All right, next, workhorse. Such similar candles. Huge upper wick. Rejection from the trend line. Coming back down lower. Tomorrow, anticipate same idea. Inside bar, potentially a slight breakdown under. Waiting for that 88 to catch up. The 88 is your guide. As long as we don't break and close under it, there is nothing to worry. Chart is still looking strong. Tomorrow, we might want to see a touch on a back test of this wedge, which would line up with the 88. That would be a perfect entry. No bear volume whatsoever either. Gonna add this to top watch tomorrow. Next, CLOV. Decent bear action. Huge upper wick. Went past the GP, rejecting from the trend line. Decent bear volume. Gonna want to see a hold on this previous low. Chart's looking bearish. Alright, next, RIOT. Rejecting from the 88, had a pop, or closing under the 88, rejecting from previous support resistance. Decent bull volume. Tomorrow, want to see that follow through. Want to see that follow through, breaking that 88. Another notable level here. Yeah, looks like we might just get pinned between this zone for a little bit. The 80 bull flag has broken bear. Chart's not looking so great. Want to see the curl right now, or else looking for further downside. Next, BNGO, BNGO. Double lower wick, still strong buying. Lack of sellers. A very lack of sellers. No sellers here. Huge bull volume. No bear pressure, no bear volume. So bull volume. Even less bear volume. Bull volume came back on. Still less bear volume. Same idea. There is no sellers on this chart. 88 remains your guide, as long as we don't close under it. $10 should be a key zone to watch. 88 is actually above it now, but it's going to be somewhere around there. Next, BBBY. Bingo, no reason to sell. BBBY, we have closed under the 88 for the first time. Huge upper wicks. How much did we run? 203%. Now this chart is kind of interesting because we passed all sorts of targets. Well, technically rejected from a 1 to 2 extension. Next day we bounced from 88, which makes sense. But then the day after we gapped up and ran. Then today we have a huge upper wick coming back down. So now it's becoming a struggle for bulls to keep it up. And considering we have broken under the 88 now, would anticipate a little bit further downside, especially now that we have ran 203%. Looking for either inside bar or further downside tomorrow. Next, all right, so the next 5 tickers, going to go through them relatively quickly. Have discussed them in the market review video parts, and they are the infamous GameStop and 4 other ones. Let's look at this with extension on. All right. Now, funny thing with this this stock is, I still remember the last time I looked at it was way back here, way back in October. Not even that far away. It's 3 months ago. It had popped from $4 to near 16, and I'm just thinking, what is this company? You know, 400%. Like, I don't get it. Who? I imagine, I still haven't looked it up. Doesn't really interest me. But like, who buys games online? That's not from Steam and them. It could very well be part of Steam. Don't get me wrong. I don't know I haven't done my research on GameStop. It especially doesn't interest me to do my research after this type of hype, pump and dump as well, potential dump. Anyways, yeah, 200% back. Oh, this is already chart. Like it wasn't that. It was August, October, 1.5 month, 200%. Then from there, went into a sideways action, and it, for a very long time, then it popped again. Made a higher low. Should be watching this on the daily chart. Oh, it's gonna be really hard. All right. It consolidated, went sideways, made a higher high, made a higher low, higher high, higher low. Now we are just straight popping. I don't really want to say congrats GME bulls, because right now this is more so like a hot potato game. Okay, if you are trading it and you're making profit, good for you. Applause to you. It's you've got guts and you're executing correctly. Make sure you take profits. We are still seeing lack of sellers, lack of bear volume, but with the uncertainty of brokerages restricting tradings on this name, and there's actually been a couple forced sellings on this name as well. As in they halted it, they stopped they restricted new positions, and then they force sold your stock while you couldn't do anything. Okay, so just be careful if you're trading these next top 5 hottest pump and dump tickers. Don't be the last one left holding the bag. You've enjoyed some gains up. It's okay to take the time to relax. Enjoy those gains. Don't get greedy. Enjoy them. Think about how much we've ran up. Okay, in 6 days trading time. Come on, 6 days trading time. 1,239%. That could very well happen on the way back too. Let's say we do 4 days backwards, 87%. And just to show you guys, this was a screenshot I took this morning while my brokerages were down. So GME, this is 9:30ish. GME amongst the few there is still the strongest, minus 15%. But look at AMC, minus 54%. BlackBerry, minus 40. Nokia, minus 28. Bed Bath & Beyond, minus 25. KOSS was still up. It's the newest focus of the Reddit pump, so makes sense that it's still green. And Express, minus 50%. This one wasn't watching. Anyways, so yeah, don't be the one left holding the bag. If you put 10,000 in, within an hour, you could very well see it go down to $3,000. So just be careful. And we are trading up after hours because trading has resumed on GME. Now let's go to AMC. Thank God I took profits yesterday. Saw this crazy volatility, huge dump down, saw the buying power came back up, then a little bit of a further dump, but didn't go past the low of day, so held. Then we saw straight buying, but towards the end of the day I saw decreasing bull volume, decided to sell. Best sell in my life. Well, one of the second best trade percentage wise. Sold on these upper wicks, I believe is the third wick, 1,000%. 1,000%. However, my entry was not from here. My entry was from back here, January 25th-ish, on that touch of that 30-minute 8. Then from there, we just grinded up. They gave me no reason to sell, kept that 30-minute 8. We broke down, but came back up. So, and it was a January contract, so was looking to, well, January 2022. So I was looking for a long-term hold on this. Did not expect to pop like this, but I saw 1,000%. Took profit. Saw the upper wicks. Crazy. time frame wise and percentage wise, best trade. Time frame combined with percentage wise, best trade. Percentage wise, second best. Been a hell of a trade. Glad I didn't get stuck with a bag. Hopefully you guys are not getting stuck with a bag on this one either. Next, same idea. BB. Big selling pressure. Big selling pressure. Right on this, what is this? Previous support? It's not even a strong support, so would anticipate that we will see further downside. We did gap fill. Lack of sellers. Gonna want to see either a curl or we're likely to see further downside. Nokia. Came straight back down, eh? Still lack of sellers. With the trading, now with all these 5 tickers, they're all the same. It's, with the trading resuming tomorrow, we could very well just negate everything and see further upside. Now that the Reddit pump still remains. KOSS looks a lot stronger. Bouncing from that 4 hour 8. Little bit lack of a bull volume. But we are not coming back down. We are holding this last close. Last 4 hour candle close. So if you were to trade any of the 5 tickers, GME and KOSS would probably be your better bet. GME is the top trending Reddit stock or Wall Street bet stock. And KOSS, I believe, is quite a bit lower. So just keep your eyes on GME. Last but not least, a regret. Not because of, oh, I should have get in, I wanted to get in. I am in. And I had this drawn out. The GP. Alright, so this is score. GP from the last move. The last impulsive move from down here to the higher high. And I was looking at this. We wicked from it on, is this daily? There we go. We wicked from it on Tuesday. And when I was looking at this, I was like, okay, that's big bear volume. Tomorrow, I was thinking about this on Tuesday. So tomorrow, we'll likely see a little bit further downside. So I had a limit buy for 258, but I forgot to roll it out today. So it actually expired. And then brokerage problem, so I didn't get to enter it at all today. And look where we bouncing from, 256. Man, that was my additional entry that I had targeted. Anyways, what a crazy bounce today. Increasing bull volume, not significant bull volume. So Friday, we're gonna want to see another increasing bull volume to make sure that this is the higher low. If we start to see a sudden drop in bull volume, or even some bear volume come in, could very well this could be very well be the lower high instead. So right now we are most likely gonna form a bull flag on the weekly. We are extended from the weekly 8. So from here, anticipation would be something like that. We drop too quick, too fast, or too much too fast on this move down, and that's why this one right now I'm thinking is just a bounce. From here, we'll go in the channel for a little bit before the next leg up. So not too much of a regret, but it's just more so one of those things that where I had the entry in, just forgot to roll it out. Kicking myself a little bit, but we'll likely get another entry around here anyways. Alright, so that's it for today. Hope you guys enjoyed the video. If you are looking to get out of debt or build that first pot of gold, make sure to hit the like and subscribe button in order to get updates on our new videos. Also, check out our website for the free giveaway on 7-day free trial to our trading community with 85% plus of success rate. at totalcontroltraders.com. Stay safe and be in control. I will see you guys in the next video. Thanks for watching, guys.